All right. My name's Frank McCormick. I'm the editor of the Waterways Journal, here with Ken Erickson, a friend and colleague. I really appreciate you doing this interview. Before we get started, I just want to say thank you to the Waterways Journal, which is sponsoring this segment. So Ken, you're the managing member and strategic advisor for Polaris Analytics and Consulting. You've also been a contributor for the Waterways Journal and a sister publication, High Plains Journal, for coming up on 2 years, I believe. Beyond that, I was going to let you introduce yourself to listeners or viewers that aren't as familiar with what you do.
Great. Thank you, Frank. Appreciate working with the Waterways Journal. And certainly it's been a pleasure to work with you for several years now and be able to contribute to the Waterways Journal, High Plains Journal, and the Great Lakes Seaway Review. I started Polaris Analytics and Consulting 2 years ago. Polaris Analytics consulting business where working with people with data, and it's a starting point. And it's the analytics side, and it brings this vast amount of data to a useful form that can be helped start to inform a knowledge set that can give people perspective in order to make knowledgeable and strategic decisions, not to do something, but more exciting, to do something or to pursue something. And that's then where the consulting side comes in, to work with people in areas of risk management, site analysis, feasibility, due diligent work, be able to do things that help on folks making decisions in their businesses every day. And so I've got a career that stems back to working on the waterfront. My family were longshoremen on the West Coast at the Port of Tacoma. I had the opportunity to work out of the longshore haul with the ILWU as a non-union laborer, but nonetheless was able to work on vessels on the docks, and then ended up going off to school, graduate school, and then joined the U.S. Department of Agriculture in their transportation group, and then spent time with the National Agricultural Statistics Service within the U.S. Department of Agriculture. And then I joined Sparks Companies here in Memphis, Tennessee, where I live. And then over time, we were sold to Informa, became Informa Economics. And through all that, I was leading our transportation practice, expanded it, the offerings, and then co-led our global consulting practice, and then really built, as we got into Informa, and then we're sold to IHS Markit, our client advisory development team, working with people on price risk management, thinking strategically in their businesses, and then still leading the transportation practice and helping with consulting. And then we ended up merging with S&P, and that's where I was given an exit ramp and really opened a door for me to start Polaris in that process. And so it's been a lot of fun. As much as my dad's side are longshoremen, my mom's side were railroad people. So in many regards, be able to connect the globe and the commodities that are grown, produced, mined in the United States and that are needed here in the United States through transportation has been a lot of fun. So get to work with Waterways Journal. They had acquired a Barge Fleet Survey that I led at those previous companies. And now I've been able to run that survey with the Waterways Journal for the last 2 years, and also put together a commodity report that looks at the commodities moving on the inland river side of things. So fun to be able to work with the Waterways Journal team, as well as at the Inland Marine Expo, IMX, every year as well.
Sure, and that's a good segue to something else that I wanted to ask you about. Why don't you take a minute to just familiarize me and any listeners with what you do there?
Yeah, thanks, Frank. A couple of products. One is a Horizons column I write monthly for the Waterways Journal, High Plains Journal, and then quarterly for the Great Lakes Seaway Review, looking at things economically, thinking about current events. I'm looking at what's at the horizon. What are the things that we know today? Then what's on the horizon? What can we see? The more fun part is what's over the horizon. That's where the fun starts in business for me. And really, as I try to anchor people to their future, is looking over that horizon, thinking about strategic planning and resourcing and different scenarios. Within those products at Waterways Journal, one of them is a Barge Fleet Survey. And it is a survey of barge operators of the Mississippi River system and its tributaries, and asking how many barges do you have in operation by type and by year built. And then we ask a few other questions along the way. and to put together kind of a picture for the last 35, 40 years that the surveys has been done of what the size of the barge fleet looks like, what is not only the size, but how many were added to the fleet, how many were permanently removed in terms of retirement. And so there's a good picture that people get of the previous year's fleet. The official government data usually is about 2 years lagged by the time it comes out and is available. Another product is the Barge Commodities Report. And that takes each of the three major barge types, the barge dry covered, dry open, and the tank barges. And it looks at, all right, what's the supply or what's the demand for those barges there? And so we take the commodities that are moving in those particular barge types, build a balance table. Well, here's the commodities that are moving there. And then we put the barge count, we index the commodities moved and the barge fleet to 1998. What we're looking at is the barge pressure index. And if that pressure is rising, that means the fleet's under more pressure, either because there's not enough barges or there's great amount of demand for barges or both those. Conversely, if that index is falling, that means there's less pressure on the fleet, either because there's too many barges or there's not enough demand or both. So we look at that for the dry covered, dry open, and tank. And that means it's got to have a fundamental view of those commodities in the background. We also look at the average miles moved. So you're getting tons, ton miles, average distance moved in that commodities report. So that's two reports. And then a third one is really looking at a long-term outlook, barge fact book, and looking at the 5-year outlook for commodities moving on the river system by barge type. What's the size of fleet required? So that means you need to understand two things. We can look at what we believe the size fleet needs to be, but what's the retirement schedule? When will we expect barges to be retired? And then you subtract that from that total, then that gives you an idea how many new barges need to build in those subsequent years. And that's where the real fun gets to be, because now you're starting to understand, can those barges be built or not? And what's required to do that? And what are the constraints around that? And then looks at things around policy, regulations, the towboat side of things, which comes out of the Inland River Record of the Waterways Journal that has all things on the towboat side. So bringing together multiple different products of the Waterways Journal into one product. And that certainly is a great amount of opportunity within.
And I know we've been tracking in your column and some stories, things like low water and impacts on barge configuration and capacity for moving up and down the rivers. One thing I've seen is some of the impacts from the government shutdown as far as sources for data that we use in some regular graphics in the magazine. I was hoping you could speak about current conditions in terms of water levels, trade conditions, harvest season rates, how those are interconnected, and then maybe if you can connect the dots to things like barge rates and construction outlook and stuff like that.
Frank, the government shutdown certainly takes a lot of data away from the marketplace to be able to consume on a daily and regular basis. Not all data is perfect, but you're trying to use what's available to understand what's the pressures in the system. What are some challenges that we see out there? Are there some early warning detection of economic activity or some sort of disruption in the system here? Not to have data is really a disruption. It might as well be a hurricane. It might as well be low water. It might as well be shutting off trade due to a tariff, because without data, after a certain amount of time, you're starting to fly blind. And without any kind of radar to help see what's around you, at least where we're at the horizon right now, you get a picture of what's on the horizon. It gets to be a challenge to see what's over the horizon. The good news is that there's certain sets of data available. We can at least see some water levels in certain areas. We can get an idea of what the weather is and some of those things. Where we start to lose some activity is some of the official labor statistics or barge movements or other things. Now, some of those are available. They're constantly running. But if there's problems with it, they may not get the attention if the system breaks down or there's a disruption or you need to reboot a system, let's say. So there gets to be risk out there, and to be able to communicate that with the industry. You're looking at the global marketplace, people aren't having to make decisions if they're going to buy from the United States, whether it's coal, grains, other commodities or products. It's a 90-day, 120-day horizon to plan. They're looking at what are all the options out there to make that decision. They're looking at not just the price of the commodity, but then the ability to move it, because they got to back off to be able to get it into a position to load onto a ship, for that ship to get to a market destination to be unloaded. Cargo has an origination and a destination. To get there, you're going through multiple steps, a multimodal approach to get to a market position. When I look at the low water right now, it's summer, we're into early fall. We've come off a summer that's was fairly wet in many places, but then it started to dry out. We've seen that water levels start to drop here in Memphis, where I live. We're now just below average for this time of year, at least for the last 5 years. In the last 5 years, 3 of those, now 4, have been low water events. And 22 was one of the lowest events, and 23 was even a record low in Memphis. 24 was a little low. What's interesting is how the industry has learned a lot. And the past 2 years, the IMX, wonderful panels there. And one of the panels each year I've enjoyed is what has been learned navigating, especially through low water, and how port captains, Coast Guard, Army Corps engineers, sort of barge operators, whether it's people in planning or in strategic development, they communicate how they come together in person and have a relationship to address the problems of low water and to anticipate where there can be challenges and to try to mitigate the risk of how they load barges or what type of tow configuration or time of operation. Anytime you start putting restrictions on, now you're starting to limit the amount of volume that goes on a barge, the number of barges in a tow, or the time of day that you can transit. All of those have a cost implication. Reducing the amount of volume loaded in a barge, you're foregoing an opportunity there. So there's an opportunity cost. And that opportunity cost gets bore out really in the form of higher freight rates, because you need more capacity to move the same volume. You just can't levitate barges. When we look at those barge freight rates, what happens on the agricultural side? A signal gets sent upstream that says, hey, don't send as much grain to the market because the price is going to have to fall so it doesn't come into the market. If it's going to move, the farmer has to accept the lower price to send it to the market. So you get this challenge in that marketplace, because otherwise, on the fertilizer side, it sends higher freight rates, and you're going to need that fertilizer for fall field work when the farmer pays a higher price. What happens in the end is that not only do the farmers not send as much to the river, competition, the world looks someplace else because they can't necessarily rely on the navigation to get to an export position within that time frame. Competition is spurred elsewhere around the world. These events are not just local, they're global in nature, and people around the world, having done a workshop in Dominican Republic earlier this summer to a group that are wheat buyers. If anything about U.S. transportation, they know river stage levels and know that those are important. They also believe that if there's a low water, that means the river's closed. No, the river's not closed. It's just you can't move as efficiently through the system. So that low water event gets to be important, because when we look at the barge fleet, we're kind of in surplus on the covered side because we haven't had as much demand. But now we're at a point in the new marketing year for grains in particular. Last year, let's say in 23, 24, we were down to the equivalent of about 1,000 to 2,000 barges too many as far as demand. But demand's coming back potentially so big on corn exports in particular, that could actually take away that surplus position, and maybe you're going to be short or 500 barges from one year to next. You can get a big shift in the demand. So from the corn side, you're seeing some positive signs. Coal exports have been really good. They've slowed down a little bit. Liquid has been fairly steady. It's now at levels you saw before COVID in 2019. The question is, how much more will they rise? Will they continue in that regard? So there's a lot of things that be looked at here, and this low water could have a lot of implications. But meanwhile, the industry's done a lot to learn how to navigate during low water. The Army Corps has done an incredible job with some emergency funding from Congress to make sure that the navigation channels are available and at navigable depths required by law. One great rain event could really help the low water on the lower Mississippi River. But right now, there's not a big rain event, and we haven't had any hurricanes. Hurricanes are great sources too.
I wrote you use data as a starting point, and I feel like when you're talking about communication during low water and how to respond to low water, I feel like that's getting at the same thing. It's communication, and that informs action.
That's so important because you need to have quantifiable levels of information to be able to tell the story. Data helps underscore the story. And then it's about how well can you bring the color to that data and then bring the experience that people see out there. Says, yeah, 2 years ago we had record low levels, but you know what? We've learned a lot from there and we've learned how to adjust for it. We can see it happening. Look, the Army Corps, they try to do a good job, or NOAA, National Oceanic Administration, I forgot an A in there. They try to forecast what 30 days look like on river levels. That is so much more art than it is science because they're looking at current conditions today with what could happen in the future. And right now, leading an effort of looking at how well do those models perform? What's the backcasting on that? People are wanting to plan and have tried to put that together with the data and understanding.
And I feel like that's really interesting because I would imagine that grain purchases happen a lot farther ahead of time than 30 days out. And so how do you balance that very in the moment dynamic of river levels, rain, and that sort of thing with having to move out farther in advance as far as planning for where am I going to get grain? How am I going to get it to a point of export and those things?
That's a challenge because on one hand, the pricing is going to reflect what's going on with transportation conditions. We talk about, there's this term called basis, and that's the difference between the futures price in Chicago and a market position, let's say in New Orleans. It's an infamous CIF, the cost insurance freight. So that basis, it's just the difference between that cash price in New Orleans and the futures in Chicago. It's really transportation. If there's an impediment, higher freight rates have to go up. That sends a signal that you're to the CIF market in New Orleans that you got to raise the price to get stuff down there. But the problem is upstream, the price is going to fall at the barge loading location to tell the farmer not to send as much because we can't do it. The system's not going to allow it. So the farmer, if they're going to send it, they're going to pay for it. People are making economic decisions to buy grain. Let's say today, looking at what's the price. And so if the price is going up at the CIF market, then there's a FOB market, the free on board. So you come into an elevator, CIF, they unload it, goes into an elevator, and they load it on a ship. That's a FOB. And once it gets to that point of being FOB, meaning it can't come back into the elevator, it's going on the ship, there's a spread. That's the gross margin. And the world market's really looking at that FOB price at the Gulf. And if that FOB price is going up, they're going to run away from it. But it also means that people want it, and it's sending a signal upriver, but there may be nothing to send. So you may not want to buy today because that FOB price is too high. But then the question becomes, we don't know how long this low water event's going to last. Will it last 30 days? Will it last 60 days? Will it last forever? And I can tell you, when low water starts to show up, people around the world call, whether it's in Geneva, whether it's in Singapore, whether it's in Jakarta, whether it's in Dominican Republic, they're all have a keen interest because then they're trying to look at where's my next best alternative. Is it someplace else in the United States? Does it come out of the Pacific Northwest? And certainly if you're in Asia, great, you got another outlet. Problem is if they're already running full and have their export elevators at full capacity, can you put more trains in out there? Or can you go to the Great Lakes, or can you go to the East Coast? The East Coast doesn't have much throughput capability. Great Lakes is somewhat limited, but it's a much longer move. There's some opportunities nonetheless. The Texas Gulf is a rail market. Can you get it into the Texas market? Or do you go offshore to a U.S. competitor? And we've seen that a lot. And certainly within South America, especially, we did see a lot in the Black Sea. And that creates a lot of challenges. And people get used to those new pathways. And those pathways sometimes become more permanent than coming back to the original location. So that is a problem for people. People need options. Sometimes you see in the Gulf, there's an option for loading. Either I can load at New Orleans or down in South America and get volumes from there. That's not a bad thing because you've got two areas you can go load. And if there's a problem at one or the other, at least a buyer overseas can buy so that no one goes without food, no critter goes starving, and people who need fuel through a biofuels type thing, they've got the feedstock to make that happen. This industry is used to challenges. There seems to be always something from one year to the next. Sometimes there's two things in one year, but they're resilient. Much like agriculture, there's changes going on. There's an aging population within the waterways industry. But with the resurgence of interest in waterways and in maritime, not only in the present administration, but even the previous administration wanting to move that way to try to get our maritime roots back and to be able to support waterways investment. There's greater days and better days ahead, hopefully. We've got competition in the world. Competition is not bad. It's now stepping up to the plate and showing that you can deliver and not only take care of your own citizens, but be available to provide those services to the rest of the world that they're willing not only to buy, but recognize that there's a better value, a better commodity, a better quality that could come with that. And that's a challenge that's before us as a country. Step up to the plate and make those things happen.
It's a good last word. Thank you so much, Ken. Yeah, always a pleasure.
Thank you, Frank. It's been a privilege.